Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I am a financial advisor, but this video is not financial advice. In this video, I want to talk about why GameStop hiding PowerPacks off of its balance sheet in a separate joint venture that's not put together with its operating numbers is actually very bullish for the stock, very bullish for PowerPacks, very bullish for GameStop, the legacy business. There's three main reasons. Some of those reasons have some reasons within the reasons. Hopefully you learned something. Thank you for being here, by the way. And we'll do a little bit of watching the stock as well because it's Monday morning, right? It's the most exciting time in a lot of ways to watch. Good morning, Great Babe. Glad you're here, man. Welcome on a Monday morning to this wonderful live stream. Before I get into it, thank you to those who have subscribed. We are scaling Mount Fuji together, aka the Pokey Sub Club, from now all the way until 3,776 subs, 3776 being the altitude for Mount Fuji being symbolic of the Pokemon franchise. Also, thank you to those who have joined as fans and friends. All the earnings of the channel go to DRS Book Jamie Shares. About 1 week from now, I will receive a payment from YouTube for November, and we will get to increase our Budget for Life Infinity Pool, which currently is at 34 shares and $29 of gains, and we're excited to continue building that together. So thank you for making that possible for me, for the company, and for supporting the channel, which helps the channel become more known out there, right? Gets the fundamental story talked about. We do appreciate it a lot. Okay, so top three reasons, which if you haven't watched this video, you should watch it. Exactly where GameStop is reporting PowerPacks. The summary that you need to know for this video is very simply that these numbers for GameStop's Q3, their operating income, their margins, right? These numbers do not include digital PowerPacks whatsoever. They are not there. Digital PowerPacks numbers are hidden in a couple ways, but revenue is completely off the balance sheet, off the income statement. There is a little bit you can glean from GameStop's other liabilities, from GameStop's other assets, from GameStop's other income. There's a little bit you can learn. And from the cash flow statement, we will talk about projections for how much PowerPack is doing in a future video. Let's stay on topic on this live stream. So reason number one why it's bullish is that PowerPacks can grow in secrecy. So obviously this is pretty intuitive, but the less that GameStop publicly communicates about their digital PowerPacks, the less that competitors can realize how much digital PowerPacks is selling. And I think it's pretty commonly held. I know I've heard Jeff Bezos interviews talking about this, but several different major CEOs, competitors, Elon Musk. When you are starting something up, when you're building a startup, it becomes significant. It becomes important that you gain a lead on competitors, right? The longer that you can grow, the longer that you can scale before more and more people coming to fight for the same market share, right? More people joining, creating competitive products, the better, right? So very simply, by not having to report revenue for digital PowerPacks, GameStop can potentially stymie or alleviate some level of competition that if they saw how much revenue digital PowerPacks was doing so quickly, they might say, oh, I want to come after that. How can we beat that? Let's create something even more impressive, which would be hard to do. Obviously, there are several competitive moats that GameStop has created within their digital PowerPacks, but the less that they can say now, the more they can continue to grow now while potentially avoiding as intense of a competition in this growing market. Let's talk about the two biggest reasons Okay, that's the the first reason I'll mention. It's the simplest, the most intuitive, but long term the least impactful, right? Not like that doesn't like all of a sudden make digital power packs more valuable just because other people don't know about it. But there are two even more bullish um, aspects to digital power packs right now being off balance sheet. The first is that fundamentally, by creating a separate company that's a separate joint venture, GameStop ensures that digital power packs is valued separately from their core business. GameStop's core business, the retailer, will be valued separately from GameStop ownership in digital power packs. This is really important because we've been talking about in past videos how digital power packs fundamentally is not a brick and mortar retail product. It's not even an online retail product. This is not retail. This is an entertainment product. This is a gambling product. I know some people don't like that word, but as a business, it's a very attractive industry. It's attractive for scale. It's attractive for returning customers. It's attractive for the stickiness, dollars spent per customer. It's attractive for the multiples that you receive on the valuation for the business, right? So someone that wants to be involved in a hyperscaler, a high top line growth opportunity, what's up, Doug, would be interested in this business, but they would not be interested necessarily in GameStop, the store. Even though GameStop, the store, is improving margins, they're shifting more customers online, right? They're doing a lot of things to improve their operation as a legacy business, but it's still retail. Even if it's online retail, it's still retail. And the peer group valuation that you're going to get as a retailer is a lot more limited. For example, if you're talking about a price to earnings ratio, okay, GameStop, like the legacy brick and mortar GameStop, it's going to be on the low end of specialty retail, right? It's going to be like a Dick's Sporting Goods, Best Buy, Ulta, right? If GameStop never improved, this is the type of range that their PE is going to be pegged against. But as GameStop, the legacy retailer, begins shifting online, they can begin achieving potentially some higher PEs. Amazon's at like a 31 or 33, right? You see Chewy over here at 45, a specialty online retailer, right? GameStop legacy can improve their valuation, but the way that they improve their valuation is very different in a lot of ways than how PowerPacks increases PowerPacks valuation. And PowerPacks, what's a similar company? Why do you think I have it here on this comp? DraftKings with an 89 PE, right? Pretty wild. Hey, thanks, Ray Babe. Yeah, the ticker is moving. I told you guys 20. We were ready to kiss 20 goodbye, and then everyone started trolling me in the comments. And sure enough, we have not touched 20. Okay, post Q3 earnings, whatever. By creating two separate companies, GameStop ensures that I'm not saying it can't touch 20 again. Okay, I'm just saying if it goes, if it stays that low again, institutions will it becomes fundamentally undervalued truly on a trailing 12-month basis. So I think certainly if it did crash that low, there would be a reaction, right? Every reaction causes an equal and opposite reaction, something like that. There would be a reaction to GameStop trading in the 20s at this point, in my opinion. All right, staying on track. Let me give a couple examples to the fundamental differences in these businesses and why it's bullish for GameStop to want them to be treated separately. One, GameStop is closing stores. What happens when they close their stores? It impacts their revenue, right? They have closed so many stores, right? They closed 240 stores in 2021, 160 stores in 2022, 244 more stores in 23, almost 1,000 stores in 2024, and they have closed over 1,000 more stores in 2025. What happens when they close stores? It affects their revenue. So GameStop closing stores, hurting their top line revenue number. Granted, not like they're making more profit despite lowering their revenue because their sales per store is actually growing very impressively across all their different segments. Still, their store closures, which there are plenty more still ahead for GameStop, right? They've said as much in their 10Q. They still anticipate closing a substantial amount of stores. So if they're already closing so many stores and they're going to close so many more stores, maybe even getting rid of Australia, France sales are still coming in. That's 100, 200 something stores that they want to close. The impact of those store closures brings down GameStop's top line. PowerPacks is a top line growth business, right? The valuation, the attractiveness of digital PowerPacks is for now its top line revenue scale. For now, PowerPacks is not a deep fundamental value, high floor cash cow business. This is a startup that just started less than 4 months ago. It is a reinvest profits, scale, 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 scale. Let's see how big this business can become. Let's see if this business could actually meaningfully expand the collectibles business, because this business is not a collectibles business. This business is a entertainment business, a gambling business. And the total addressable market for that is huge. So anyways, it's in GameStop's best interest for the revenue scale of digital PowerPacks to be illustrated with as much magnification as possible, right? To be as high as possible, which if GameStop lumped digital PowerPacks into its core operations, the digital PowerPacks revenues would be muted by the decreasing revenues for now of GameStop legacy. And the only reason those are decreasing is because of very, very aggressive store closures. So GameStop store closures, because these are two separate businesses, GameStop's store closures do not hinder the top line revenue growth of PowerPacks, which is ultimately the primary way they will be valued at first, is some type of price to sales type of number. Let me give another example. PowerPacks is reinvesting all of its profits, right? Most, in all likelihood, that's what they're doing. The longer that they can do that, the lower that the PowerPacks operating income can be. And as long as they can keep PowerPacks operating income lower than GameStop's, lower than 10% of GameStop's, they don't have to report PowerPacks numbers. Regardless of that, probably they are reinvesting profits to grow revenue. Well, what happens when you reinvest profits? Your net income goes down, right? If they are intentionally suppressing net income, their net income is low. What would that do if it was lumped in with GameStop's core operation? it would lower GameStop's gross margins. How is GameStop legacy valued right now? Is GameStop legacy valued on a price to sales? No. The type of investor that would be interested in owning GameStop legacy right now is a investor that likes deep fundamental value, deep value, high floor, right? Low risk, a very mature industry with decades of facts and figures that can be analyzed, right, to support its bottom line. And for PowerPacks to come in, reinvesting all of its revenue and all of its profits and keeping income low, for if those were lumped together, that would hurt the way that a deep fundamental investor, yeah, it's me, BK, sees what I did there. What's up, everyone? What's up, Down Lego? What's up, Al Capone, Romax? Glad y'all are here. For those to be lumped together would actually hinder the valuation of GameStop legacy, because people would say, look, margins are coming down. Oh my gosh. Look, SG&A, the costs are coming up. Right? It's two very different types of investors. But by making them separate, by making PowerPacks a joint venture, GameStop doesn't have to worry about PowerPacks reinvesting of its income, lowering or hindering the valuation for GameStop legacy. Another one, which I already mentioned, is the peer groups, right? GameStop's peer group of specialty retail, if PowerPacks was lumped in to GameStop's core operations, even though I could sit here on YouTube and say, like, look, these are meaningfully different businesses. Like, you can parse out the hardware from the collectible, and the collectibles, you can parse out the PowerPacks, which I haven't done yet. Okay, these numbers are not updated to reflect post Q3. But look, even I, before Q3, I had lumped in digital PowerPacks inside of GameStop's collectibles business. And I had lumped in the collectibles business inside of GameStop, the retailer. So even though I could come here and say, PowerPacks is separate, it's different, it's an entertainment product, it's a gambling product, it shouldn't be stuck to specialty retail, online retail, right? It has a different peer group meaningfully that should be valued meaningfully differently. If they were lumped together, GameStop's core specialty retail peer group would drag down the valuation that digital PowerPacks warrants. But by them being separate, any analyst can value GameStop legacy, and they can value PowerPacks, and they can take their valuations for both and create a sum of the parts valuation. GameStop's peer group does not hinder PowerPacks if they are separate. One more reason, one more example why it's fundamentally bullish for these companies to be separate. PowerPacks has a speculative total addressable market. Like, how far will it scale? Plenty of people in my comments are like, but what if the odds, like what if the bullishness of collectibles goes down, right? What if the craze doesn't continue? Like, how far could it really get? Like, look, we saw Courtyard, their sales kind of flatlined in that 60 range, ultimately before digital PowerPacks came in and totally cannibalized Courtyard's numbers, right? But what if this is the highest that digital PowerPacks can ever get? Is 60 million a month, right? And that's at the peak of collectibles popularity, right? So what is the ultimate total addressable market for PowerPacks? What is the ultimate scale of revenue? We know that revenue is going to grow in Q4 compared to Q3. We know it's going to grow in 2026 compared to 2025, simply because PowerPacks has been in beta. They've only had a handful of types of packs available. Like, they will be able to increase their revenue simply by growth of their own product for the coming at least few quarters. But what about year over year after that, right? What about 2028 compared to 2027? How fast will revenue continue to grow? That is a speculative question. And the types of questions that type of investor would have about the ultimate scalability of PowerPacks would lead to a valuation for digital PowerPacks that contains substantial downside risk, right? Whatever you, and you can mitigate against that risk however you want. Like I had talked about before quarter three, I said, what if PowerPacks grows at 30% for 5 years, but then it slows down to 11%? Or what if it grows for 100% for a year and then 50 and then 11% after that, right? Whatever way you want to kind of visualize that. What if it grows really fast and then slows down, but it's still growing? What if it shrinks, right? What if it only grows 5%? Like, there's so much unknown because it's a brand new market, a brand new product. Even Courtyard is quite new, right? We don't have 2 decades of history to go off of for valuing these types of businesses, right? Just in 2024, their whole month was $440,000 of revenue. And that probably includes Courtyard's own repurchases, right? So this is probably only 60% of that is probably what customers spent on Courtyard just a year and a half ago, right? So the speculative nature of digital PowerPacks, because they are separate, it does not hurt the way that someone would value GameStop's core business. Their core business is protected from the digital PowerPacks business, and the digital PowerPacks business is protected from the core business. Another way to say this is that the types of investors that would be interested in each of these businesses are very different investors. One business is the legacy, high floor, low risk, cash cow, cutting costs, making little iterations to increase margins. It's totally increasing. Like, they're focused on increasing these profits, right? Their income, whether you're talking about net income or operating income, has been growing ridiculously. Like, they're focused on the bottom line in the core business. And if you are a conservative investor, if you're a deep value investor, then you would like to see these numbers. And then you would value GameStop with some type of conservative PE, but one that appreciates the fact that their EPS and income and operating income are all growing substantially, and their efficiency is growing substantially as SG&A continues to come down and down and down and down. Margins continue to go up and up and up and up, and their cash is going up so high as well, right? It's just a very interesting and attractive investment for your deep value investor. PowerPacks is all about scale. It's all about revenue growth. It's all about total addressable market, right? It's a high PE, high spec, low floor, high risk type of business. So by separating them out, GameStop is able to maximize the valuation that they receive for each, discounted somewhat for the fact that they're all, the only way to invest in either is to invest in both, right? So if you really value PowerPacks, but you really don't value GameStop legacy, well, if you gave basically, what total value do you have on the company, right? And so even if you dismiss GameStop legacy, the total value that you might place on the stock could be inflated by digital PowerPacks. If you really highly value GameStop legacy, your total value for the stock won't be hindered by digital PowerPacks because it's not included in these numbers. Let's talk about number 3. That was all number 2. Fundamental reasons why PowerPacks being separate, off balance sheet in a joint venture is bullish. Those were all fundamental bullish reasons for these being valued separately. And that's all sorts of reasons why them being valued separately is bullish for the stock, and them being two separate companies with ultimately two separate financials ensures that they are valued separately. You don't have to rely on a YouTuber saying, look, they're separate. Look, here's the retail, and then here's the asset management. Like, it's like, no, they're actually separate companies with totally separate statements. What's up, Henry? What's up, It's Night? What's up, Wobblegong? Great to see you guys this morning. Great to see you on a Monday morning. A little bit of activity on the stock. Let's get into reason number 3, the technical reason why it's incredibly bullish that PowerPacks and GameStop are two separate companies. The third reason is by having them separate, it opens up the opportunity for a spinoff. A spinoff. We talked about in our PowerPacks, the most recent PowerPacks video I made, how at the 20% threshold, right, when PowerPacks is doing 20% of GameStop's assets or revenue or income, literally PowerPacks as a company has to be audited, right? They already have to report their own complete financial statements. So what is the leap between PowerPacks reporting its own 10Qs and 10Ks and PowerPacks being spun off? And what does spun off mean? It means it's its own ticker, right? Its own company that GameStop could still retain substantial ownership percentage in. It's not like GameStop would have to give it up. Okay, public market, you can have PowerPacks. We'll just stick to GameStop legacy. No, if GameStop felt that the sum of their parts, the way that GameStop values its legacy business and its PowerPacks business, is not being properly appreciated within the conglomerate, well, because it's already separate, from day one separate, it is so much easier for GameStop to say, you know what? Press the button. Press the button. Digital PowerPacks, aka PowerPacks LLC, is its own business with its own ticker. Why is that technically bullish? Because if you are short GameStop, overnight you are now short GameStop and you are short PowerPacks. Right? It just increases the number of battlefields that a short seller would have to maintain. And it also removes that discount, right? If someone is really excited about this and they want to own this, but they're not too excited about GameStop legacy, then they're going to say, well, let me give somewhat of a depressed value for GameStop legacy. And if the conglomerate becomes attractive enough, then maybe I'll go ahead and buy some just so I can have exposure to this, right? And vice versa, if GameStop stock is saying, man, as a conglomerate, this is looking like it's pricing in a really meaningful value for digital PowerPacks. But what if I don't really care about digital PowerPacks? What if I'm a deep value investor that only cares about the bottom line? I only care about the income. Well, if the stock, if your estimation of the stock's fair value is X, and you think that the stock's trading value is getting X plus Y, and you're like, man, I don't care about that why, then you might not buy the stock. But if they split into two totally different tickers, then all of a sudden your legacy investors get to buy the stock at the true value for just legacy, and your spec upside startup venture capital tech oriented, right, growth oriented investors get to buy PowerPacks at just the value for PowerPacks. And meanwhile, short sellers have to maintain short positions on two different tickers, right? Super, super bullish for GameStop. Those are the three reasons. Surface level, they get to operate in secrecy. They don't have to report hardly anything, right? They can do what they want without a ton of eyes on it. Reason number two, fundamentally, it ensures that GameStop receives some type of separate valuations for their legacy and for their PowerPacks. And because these two businesses are fundamentally very different, appealing to very different types of investors with very different types of financials and arcs for the coming 18 months, it's bullish, it's helpful for both parties, right? To be able to look at those businesses separately rather than having to guess at what portion is what from within GameStop's operations. Third reason, technically, it opens up the door for an easy spin-off by which GameStop could then maximize even more value fundamentally, right? Because each investor would have the opportunity for a pure play in the company that they're most interested in. GameStop could still retain its level of ownership in the now publicly traded PowerPacks business, while also increasing short exposure, giving that many more headaches for shorts of GameStop. Pretty exciting stuff. Pretty exciting stuff. So I'll talk in a minute here. I'm going to talk about what's the timeline that I expect with kind of this this digital PowerPacks reporting, etc. We'll get into it. But let's say what's up in the chat for a sec. Let's watch the ticker for a sec. Anything that I missed? Thank you guys for being here, by the way. 52 of you guys on a Monday morning. Y'all are crazy. Easy Rider says, yo, just want to say I really appreciate the time you spend on this topic. Thanks, Easy. I appreciate it. Duma says, you are exciting. Thanks. I'm exciting. What is up? Demon Clippy, no problem. Europe gang, what's up? You're not in the morning. You're in the afternoon or evening. What's up, Europe? Downwego says, great job, sir. Hit the like. Yeah, if y'all want to, you're welcome. You're welcome to hit the like. We got 13 likes. So we're back. Oh, I like the batting average thing. I like to bat 300 so that I can be in the pros, Right now we're batting 236 on the current view count versus likes. So I am a bench warmer, maybe only in the minor leagues, which is all right. But hey, if you want my like to view ratio to be at 300, just hit the like. GME warrants are ripping, according to Romax. Let's check out the warrants. So yeah, I mean, that's honestly a nice kind of transition talking point, because the warrants are another way that GameStop issued a new ticker, right? It functions a little bit differently, obviously, right? But shorts are now having to fight the GameStop. Oh, and the market's red. So fun. The GME ticker and the GME Plus ticker. So again, if GameStop rinses and repeats this with a bona fide, totally separate enterprise, I mean, it's just explosive to think about. Boom. The like was the hit. Getting a lift in, hearing about my favorite stock. What's up, Joseph? Hey, nice pump for the pump, you know? Lifting, stalking, pump for the pump. I'm up to 20 likes, so I think I'm in the pros again. Oh yeah, we're batting 370. We're batting 370. Thanks to the 5 or 6 y'all that helped my batting average. I appreciate that. It's Night says, do you think it's possible PowerPacks is baked into collectibles fully and not a separate entity, but it wasn't considered material, so it wasn't broken out of collectibles? No, it's not possible. Like that statement from GameStop that PowerPacks is not material means that it's not in their numbers. Like they're not saying, like they don't, that's what it means, but also the cash flow is what it means coming from investing activities. Like 100% chance, absolutely positively, PowerPacks is not in this collectibles number. But I don't really like if other YouTubers see it differently, analysts see it differently, then like they will they can they can look at those takes in 3 months, 6 months from now. It does not mean that it's not broken out of collectibles. Like GameStop has tons of businesses that are not broken out of hardware, software, collectibles. You know, they used to break out. They used to have like 8 different lines. You know, they used to have Game Informer. That was never broken out separately. But they didn't say Game Informer is not material, even though Game Informer literally did like 1 million in sales. You know, like less than PowerPacks definitely is doing and did in Q3. And no, they never make a comment like it's not material. And it's not accounted for separately. Like what am I trying to say? GameStop. Oh, you doing this to me again? Is this the current one? Nope. Is this the current one? Nope. Is this the current one? Yes. The cash flow coming out of operating activities is all of their operating activities. The cash flow coming from investing activities is all of their investing activities. This collaboration agreement is in their investing activities. There's no doubt about it. But again, I don't really like care to argue. Like if someone else thinks differently, that's fine. But they're not true. They're not right. These numbers do not contain PowerPacks. Correct, Henry. PowerPacks is not on the earnings. PowerPacks is not on the earnings. So I'll save it for a separate video of like how much revenue did PowerPacks likely do, etc. But it's not there for sure. Easy Rider says, have you had time to model the free cash flow to each bond vesting date? Oh yeah, the bond vesting. Yeah, you're a true follower, man. A true member, a true subscriber of the channel. Yeah, I'm super pumped too. I have personally back the napkin math. And honestly, I'm glad you like talked about it because like again, I had a really gross overestimation of what hardware sales would do. And that threw off a lot of my Q3 numbers. A lot of my Q3 numbers were so stinking fire. I'm going to save some of that stuff for like when we're modeling Q4 and just take it piece by piece. But the hardware one I'm excited to get into relatively soon. Regardless, it's easy to be like, oh, wow, you thought hardware would do blank and it actually did blank. Therefore, everything you've said in the past 2 months must be totally incorrect and off. When it's like, really, everything I've said has been really still tracking super well, except for that hardware number. Which the reason that hardware, again, I will get into it in more videos, but like that hardware number is primarily derived by quarter over quarter, year over year type trends, historical analysis of prior console cycles. None of those things could account for how dramatic the pent-up demand was for Switch 2. It's unlike anything we've ever seen in history. And so basically, this number got way inflated, way inflated. It basically pulled forward all of Q3 Switch 2 sales into Q2 practically, you know. But the big picture, as far as like I haven't finished up, like I haven't actually updated all of this, but like this is what Q3 or sorry, Q2 looks like. Was okay, we have 9.2 billion in cash. And it's like, well, now we have 9.35 billion in cash. Like the free cash flow in the past 9 months was like $450 million. Just the operating free cash flow. You know what I mean? So like the cash floor, it's like, do we have more cash per share now or less cash per share now? And it's like we have more. And as far as the convertibles, you've got this April 2030 date where the conversion price is at 29.85. Now, this projections assumes no valuation for the enterprise at all, as far as like the cash flow rising. I do still have the cash coming about $2 or $1 above that, but eventually I will make this like more exact. What's more interesting to me is this conversation that I've started, which is like, what is the quote unquote fundamental floor? Like, because the enterprise being valued at 0 is not really on the table for me. I don't think it's possible for GameStop to have a PE of 0 for years on end. You know what I mean? I don't think that's in the cards at all. If you do, again, we can disagree. That's no problem. I think it is possible for GameStop's PE to be suppressed. I think it's possible that PowerPacks is not reflected much at all in the valuation until materiality hits. Sure. But to say that the business will be considered worthless, I think is insane, right? For it only to be valued at cash, I think is insane. I think it's not even worth the conversation. And when you look at the trailing 12-month income, it's like, okay, we went up from 102 to 177. I have tweaked these numbers to be more conservative post earnings because I was interested like about these strike prices as it relates to the fundamental floor. When do we hit them? Do we hit them? And so I went over to the operating growth, right? Operating income, it grew by 75 million in Q3, but that's net of $10 million of asset impairments. What's up, OG? I'm doing good, man. I'm doing good. Doing good. Those $10 million of asset impairments are not going to happen every quarter forever, right? Eventually, they're going to be done being impaired, right? They're going to be done with France, and probably they're going to be done with Australia. So the real operating income improvements, more like 85 million, 88 million in Q2, 40 million in Q1. But again, look, $35 million of asset impairments related to France and Canada. So that $40 million improvement in Q1 in trailing 12-month operating income, or the year-over-year operating income improvement, is really more like 75 million. And 25 million in Q4. But when you think about the coming quarters, it's like, well, Switch 2 is now here. You think about the Xbox handheld, eventually the next gen consoles. You think about Grand Theft Auto coming out next year. And you think, obviously, of course, their own PSA collectibles, right? Their card grading, and card sales growing. Like, combined with their costs continuing to come down, the trailing 12-month operating income is on pace to continue beating prior year estimates. Like Q4, for example, it's like, okay, are we going to be able to do meaningfully more in Q4 in operating income than back before the switch was even out and before the PSA partnership? Like, this is our second ever Q4. The PSA partnership just started back then. And we're not even talking about, what if one day when the PowerPacks materiality is reached, that won't affect operating income because it's not going to be in their operations, but it will affect their net income through other net income. Regardless, you map that out and you're like, okay, trailing 12-month operating income, let's assume another $75 million improvement after Q4. And then Q1, you have, it looks like a huge beat, right? $130 million improvement, but 35 million of that is just the asset impairment being written off the books. And then another portion of that is just France being out of the way, right? France is so negative. their operating income is a negative number plus then those asset impairments. So you take away the asset impairments and then you also take away their negative income. And then you add in the fact that, hey, we have Switch 2 and we didn't before. And now GTA 6 is right around the corner, et cetera, whatever. It's like, again, a pretty impressive beat. Q2, really marginal. Only a $30 million beat in Q2. It could honestly be much more than that. These aren't like my official projections. This was just back of the napkin. Like, okay, are we still on pace for 2026 being explosive? Basically, before earnings came out, all of these numbers, convertibles officially being in the money, and then warrants officially being in the money, and then S&P 500 eligibility, all of these were just 1 quarter sooner. I thought convertibles being in the money would happen after Q4. It still could happen after Q4. And my fair value of GameStop would say it should happen after Q4, if not already. But when I'm talking about like a fundamental floor, like how low of a PE could GameStop possibly command when they continue to string together impressive quarter after impressive quarter? So I have that floor PE coming up just slightly. But what's more important is even if you keep them at a low PE, their trailing 12-month income is going to grow. And you could say like, man, that's so speculative. How do you even know that? And it's like, I don't know, maybe because they've done that for 4 years in a row now. Like their trailing 12-month operating income is growing. Their net income is growing. And their cash pile is growing. So as their cash pile grows, then of course their cash floor grows. But as their operating income and net income grows, their floor PE is also growing. And then also the operating income that you're multiplying, right? The earnings that you're using as the denominator is growing higher. And so the price, of course, I still anticipate will go higher. So anyways, as far as my expectation of when the convertibles hit in the money, or basically when the stock is over $30 a share, I think it could happen after Q4. It could happen sooner, but like I think if it broke 30 before Q4, it would probably come back down before Q4 numbers are actually reported. We have 4 months, okay, until the next earnings. I think fundamentally it's worth more than 30, but I think there's still shorts involved, obviously, whatever. So like at a point where like the non-bull money out there, like the institutions out there of the world, is there a point where they would look at the stock and say, oh my gosh, this is a slam dunk buy? I think right now we're all over it. Like I basically think anything close to 20, I think institutions would be scooping up shares. And we'll see like at the next filing window, like did institutions consider this to be an attractive price point? We'll see if they ended up scooping up shares or not. But I would think if it touched 20, or certainly if it went below 20, that would basically trigger institutional buys. But I think that will change to the upside each quarter. Like I think after Q4 comes in, that's 25. No, I do mean 4 months. OG says 4 months. You mean 3 months, right? No, the 10K gets reported later. So it won't come out till I think first week of April. Right? Oh, okay. I'll meet you in the middle. 3.5 months. This year, so yeah, okay. End of March instead of beginning of March. So it adds 2 weeks to the filing. So thank you actually for that correction. I was thinking first week of April we'd get it, but it's actually last week of March that we get it. So good news, I guess. All that to say, trailing 12-month income still growing, cash flow is still growing, but overall, I would say like it probably takes one more quarter for the numbers to look like as bullish. Like, I mean, everything's super bullish, but like one more quarter for the TTM to be high enough, for the PE to look low enough, for the convertibles to be forced in the money. Once the convertibles are like once that 30 is broken, and not just broken, but like sustained, like there's no, like if 25 is considered an institutional no-brainer buy-in, then okay, if it crashes there, it just gets scooped up and now it's back at 30. Like once 30 is no longer the, you know, the wall that you're bouncing off of, but becomes the support, which again, on a technical basis, it would kind of look like it will be once you actually can crack it and sustain it. Then it's basically like all bets are off for how high and how fast it could go, because then you have the next warrant or the next bond and the warrant after that, etc. So overall, an encouraging earnings. Was a little bit more discouraging at first when I thought that PowerPacks numbers were included. It's like, man, how could it be that low of revenue? Like, I just don't understand. Like I had estimated collectibles without PowerPacks would be somewhere 245 to 262 based on every trend we can follow. So, and my PowerPacks, when I was just doing, before I was looking at like pre-Cohen interview. After Cohen interview, I was just like only looking at it as 33%, right, relative to hardware, etc. And my hardware estimate was so off, right? When I was just looking at what do I think PowerPacks likely did, my back the napkin math was like it probably did about 30 million in sales, like conservatively. Could have done 50 or 60, right? We know that it didn't do 90. It didn't do any more than 82 million in sales in Q3. I wouldn't have thought that it did 82 million were it not for me getting sidetracked with the interview. But fundamentally, to say that, oh, PowerPacks only did 2 million in revenue is craziness. Like you could almost add up, you could probably surpass that just by adding up the posts on Reddit. Like if someone actually combed Reddit and were like, let me figure out total sales, like back what people used to do with the purple circles and Theorist book shares. Like if people did like, hey, how much have you spent on PowerPacks? Honestly, super stonk. If you want to get on this, that would actually be like in a really cool proxy floor for like PowerPacks has done at least this. But if you were to do that for what was posted voluntarily by people just during Q3, I bet you'd already come up with more than 2 million in sales, and anyways, like getting back to convertibles after Q4 is possible, but now, just like I said before, like after Q3, I said like it's possible that we sustain at like a 26 or a 28, but more likely, right, we're going to be down to like it's more likely that we don't break out after Q3, but it's possible. but more likely it's after Q4. Well, the Q3 me being high in the Q3 numbers, basically when you math it out, it's like, okay, well now it's looking like it's possible after Q4 that this is enough to get our floor at that 28 plus. It's possible, but it's more likely that we need Q1 also, and the Q1 year over year bump will be dramatic. Firstly, because there's 35 million of free year over year improvement right there. Then you have Switch 2, which was not available in Q1. And you have, of course, a full year of the PSA partnership growing. And you also potentially have digital PowerPacks hitting materiality in Q1, particularly with how many stores they're closing. Like once those stores close, those sales get off the books. Like, is it possible that Q1 digital PowerPacks are greater than 10% of GameStop's Q1 sales in 2026? Very possible. And if materialities hit after Q1, then overnight, right? Right now, digital PowerPacks probably not being valued very much at all. The moment the materiality hits and you see revenue numbers, it's like, boom, you got to value it at something. It's not nothing. And so it's like an overnight free additional $1, $2, $3, $5 per share, depending on how you value it and depending on what the revenue numbers end up being. But overnight, it's like, boom, there you go. And so if you're close, it's like, oh, like these Q1 numbers, this is all based on operating PE and operating income. What I haven't done is updated this for like the PowerPacks floor, which I'd say the PowerPacks fundamental floor, once those numbers are reported, is like a 1x price to sales. Like they are not, no one that would value a startup spec, high growth, high scale startup would value it at less than a 1x price to sales. Like the competitors in the gambling industry are at like a 4, 5, 6, 8, 10 price to sales. And the earlier on they are in their ramp, the higher of a price to sales they would command, right? So I don't think any less than a 1 makes any sense whatsoever for PowerPacks. And so anyways, you think my trailing 12 month, like, oh, what if it's not 380? What if it's 360? Which again, this isn't an official estimate. This is just back of the napkin. And oh, floor PE, what if 24, still no one thinks it's worth 24? What if it's only worth 20? Okay, well, if it's 20, it's at 29. The convertibles, 4.2 billion of the convertibles are in the money at 29. So you're already still kind of screwed. But there's 1.5 billion that needs to be at 29.85. Well, if if PowerPacks is getting a 1 or 2 or 4x sales, and all of a sudden PowerPacks numbers drop right there, it's like, well, that bumps you from a 29 to a 31. Boom. And now we're rolling again, right? So anyways, possible Q4, but more, like I don't think we're going to see PowerPacks materiality in Q4. If we do, that's crazy. If we do, PowerPacks is going absolutely bonkos. I wouldn't expect materiality to hit in Q4. But if it does, then that's obviously very bullish. Even if it doesn't, if there's enough tangential evidence, like concrete evidence, to suggest that we will see materiality in Q1, then you might see some of that start to get priced in. Like once this becomes inevitable, this ramp, when everyone can see it, there's no doubt about it, and it's only a few weeks or months away, some of that valuation is going to start getting pulled forward. Like the smart money of the world's not going to look at these trends and be like, oh, wow, the convertibles, warrants, and S&P are all stacked right next to each other, and digital PowerPacks isn't even a part of this valuation yet. And as soon as they drop it, it's going to immediately increase value overnight. for the holding company, and it could still be spun off and then accomplish even more value. Yeah, I think I might want to go ahead and buy at 25. Like if 35 is basically an inevitability on a floor level, much less what's the upside of what they're building. You could definitely see it get pulled forward after Q4 plus Christmas momentum, all that. But I think it's probably more likely after Q1 that you really see that ramp. But I do think, I think we are officially on the up. I think fundamental value has officially hit market value. And by fundamental value, I mean the conservative trailing 12-month, discounting out all of their convertible debt, right? The most bearish look at their numbers, right? I didn't net out any of their asset impairments, for example. And you have $44 million of asset impairments right there. Which if you did that, if you added in the 44 million, well, all of a sudden they're trailing 12 months to 221, which I think someone asked earlier, why do people have different numbers for EPS? It's because of whether or not you're adjusting for asset impairments and whether or not you're adjusting for that $42 billion non-cash loss for the warrants. That's why you would have different numbers for the EPS. If you take out the asset impairments, then you're already right now at 22 a share. You're at a 20 PE. And to be at a 20 PE when you're substantially more online than your industry peers, you're growing substantially faster than your industry peers, you're much more asset light than your industry peers, you have a much more engaged, loyal customer base than your industry peers. You could easily argue that at 20, GameStop is a really attractive buy. Easily. And I would argue that. I think GameStop is a very attractive buy from a valuation perspective right now. But again, you roll that forward another quarter, it just becomes more and more and more obvious. The fundamental floor finally reaching market cap and pushing up on market cap. And I think you're going to see a grind up throughout the next year and maybe still see some moments of extreme volatility and huge ups. That's definitely still in the cards. No doubt about it. Anyways, that was my super long answer to your question, Easy Riders. Still on pace for the convertibles to be in the money. Still no risk at all, in my opinion, of the convertibles having to be paid back in debt. Because again, we're still in 20. We're in, if you take this out here, we are now a year from now. We're in December 2026. These first convertibles are not paid until April of 2030. You know what I mean? So you have to imagine a dramatic collapse in everything. It's just it's seriously it's a non-factor to me, which it doesn't mean if they dilute, your share count grows. So it's not just total quote unquote free money. It means that GameStop is going to sell shares at 30, right? They're going to sell shares at 30. That's how they're going to pay back the convertibles. And they're going to sell shares at 32 when the warrants are exercised. Is that bullish from this vantage point right now when GameStop's at 22? Sure. It basically bakes in that there's 50% upside on the stock that's already been contractually agreed upon. You know what I mean? But it doesn't mean like GameStop to the moon, no matter what, it's inevitable to squeeze. That's still a different conversation. And you could argue that it's less likely to squeeze after the convertibles and warrants than before, because the share count's going to go up from 447 to 650. Right? There's a huge dilution coming. Now they're going to have cash on the other side of that. That's pretty nice. And it's going to raise your fundamental floor dramatically because this cash is going to be treated as cash, and this convertible debt will no longer be listed as a liability. So your floor goes up a ton. But is it bullish from a technical upside perspective? Maybe not. Regardless, the way I think about GameStop is I look at their numbers as if they are diluted. So the 9.4 market cap or 9.5, I basically say, okay, well, what if the convertibles are actually diluted money? I don't price in the warrants yet, although I probably should, but that would throw off all the numbers. But basically, it's like you give that same, whatever that is, 18% dilution that's coming. That's the time adjusted version of it. But you bake that into the share price, and then you also bake that into the PE. So anyways, you go over to the projections that I was talking about, and I was saying, hey, right now they're at a PE of 26. There's two different adjustments you could make. One is that asset impairment that we talked about. It's like, well, yeah, but what if you add in that $46 million or $44 million? That changes things. But then also, what if you assume that the convertibles do dilute? Well, that changes things dramatically as well, right? That lowers their effective PE meaningfully as well. Anyways, sorry for being so long-winded. What else are people talking about? How will earnings from PowerPacks get reported? Can't do tax evasion, right? So PowerPacks is a separate company. Demon Clippy, it is a separate company. They will report their own earnings. They will pay tax sorry, let me break down your question. Once PowerPacks is doing 10% of GameStop's income, once PowerPacks income is greater than 10% of GameStop's income, or PowerPacks sales is greater than 10% of GameStop sales, then GameStop will, separate from their numbers, put a footnote in their financials breaking down the revenue and balance sheet of PowerPacks. GameStop only pays tax on GameStop. PowerPacks will pay tax on PowerPacks. They are separate. They're not ever going to combine, ever. What will happen after materiality is reached is GameStop, because they have a huge ownership in this other company, will have to tell us that other company's numbers in addition to their numbers. It's not a part of PSA's operations. It's not a part of GameStop's operations. It's PowerPacks operations. It's a different company. And it's not a operational subsidiary. It's like a separate equity investment. But eventually we'll have the numbers and we'll have GameStop's ownership percentage. And the only way to own that PowerPacks is to own GameStop. PSA is not publicly traded. So the only way to get in on this business is to buy #GME. So however people value this business will be basically priced into GME. Hopefully that makes sense. So the earnings, though, that GameStop makes from PowerPacks will be reported in their other income. So right here, other income, it won't be a part of their net sales, gross profit, operating income. It'll just be like, hey, we also made some other money, just so you know. That'll be where their earnings are. But PowerPacks won't be valued based on like people will not value GameStop's other income, and PowerPacks will not be valued based on a PE multiple. GameStop legacy will be valued on some type of multiple for their operating income. And GameStop PowerPacks, right, will be valued separately, not based on this line here, but based on some type of multiple of sales. I'll get into valuation here in a sec, actually. Wrench Moon says their revenue would show up as assets if they reinvest into cards. It's not true, Wrench Moon. GameStop reports GameStop's assets. They do not report PowerPacks assets. They report an asset for their equity investment into PowerPacks, but they do not report what GameStop reports as their asset value of their PowerPacks investment is not the same thing as PowerPacks assets. GTA 6 right around the corner, maybe, right? Yep, new tickers, very possible. Tokenized collectibles, very possible. Kevin says, I hate to think how much GameStop is down on their Bitcoin holdings. I wonder if they will dip by. Yeah, right now they would have like basically $140 million loss. But that is just an interest income loss. So there's no downside for GameStop as far as their valuation based on the Bitcoin loss so far. Unless you, like, it's a lose-lose if you are bearish on GameStop. I do think they will buy, by the way. I think they already have. Like during this quarter, they've had so many opportunities to lower their cost basis in a pretty dramatic way. I'd be very surprised if the same company that thought Bitcoin was a buy 7 months ago at 106, if they don't think they should increase their investment when it's at 85, particularly when 7 months ago they raised 1.5 billion for the purpose of Bitcoin and they only allocated 500 million of it. Like they have a 1 billion in cash that is earmarked to be Bitcoin that they were just waiting for the right opportunity to deploy. I do think they deployed some, maybe 250 or maybe 500 mil during Q4. If you're a bear on GameStop though, and your argument is Bitcoin, then you either have to say that you don't care, like basically you either say that Bitcoin doesn't matter, right? It's not a part of our valuation. We don't factor that into the way we value GameStop. But if you want to say, actually, we do want to value Bitcoin because look, it lost money this quarter so far, right? There's still 8 or 7 weeks left in the quarter. If you want to value their Bitcoin loss, that means that you're valuing their trailing 12-month interest income. And guess what? They're going to make another 80, 85 million in cash interest. So that Q4 loss is only going to be like a 80 or 90 million dollar loss. And so all of a sudden, if you want to say, look, they're bleeding money. Oh, actually, no, on a trailing 12-month basis, they actually made $150 million. Like even if they have a huge loss in Q4, the best you can do as a bear is to say, we don't care about their interest income, right? The worst thing you can do is try to say, oh, look, they're losing so much money on Bitcoin. Oh, actually, are they losing money actually? Oh, wow, they're actually making 150 million a year in interest income. And obviously that would require Bitcoin to then stay that low, which every time it gets, like every QN, it gets every quarter end, GameStop's effective cost basis is totally updated. So if it ends Q4 at 85, then their entire Bitcoin position, their cost basis becomes 85. So, okay, we have a $100 million loss in Q4, but we're setting up for a $200 million gain in Q1. Like, it doesn't matter. The volatility of Bitcoin doesn't matter if you're a bull or a bear. I mean, if it's a bear, the best thing you could say is that it doesn't matter. And I don't think there's any bear that thinks that Bitcoin will crash to zero and never be worth anything ever again. I don't think anyone genuinely holds that position at this point. WJP with the clutch question of the day. This is such an important question, WJP. Maybe that's why you added me. Do you think Ryan Cohen's collectibles will do just about 1/3 of full year 2025 sales? Do you think that did not include PowerPacks revenue? I don't know if WJP, I don't know if you, maybe you might be insinuating that like PowerPacks must be included in their operating collectibles because of that interview. I do not take that implication at all. And like I'm saying, from like this is from everything I can learn, this is like factual that PowerPacks is not in these numbers. Like genuinely, it doesn't matter what I think or you think. It's like fact. PowerPacks is not in there. That said, if we go back to that interview, is it possible that in Ryan Cohen's mind, what he's thinking is PowerPacks, collectibles, total net sales? Like, how do you rationalize Ryan Cohen's comments about collectibles being a third of full year sales? When, like, what's it going to do? Like, each of these lines in Q4, I don't know. Let's just put some numbers here to humor us. Like, what is this? Geez, just do it. And then show me the percentage. Collectibles is looking like AM15 divided by sum of AM13 to AM15. Even if, why? Why? Am I cross-referencing? Equals 1046. Like the sum of this. Jeez. Golly, why am I an idiot? I don't know. This number is looking like 25-ish%. 1,000 divided by 38. Okay, so 1 billion divided by 3.8. Golly. 26%. Oh my gosh, just stop. 26% of full year collectible sales, if these are the approximate numbers, is 26% just about a third? No. 26% is not just about a third of full year collectible sales. So let me tie it together here. WJP, sorry for my highly regarded calculating. What do I think is most likely? I think it's most likely that in Cohen's brain, he was including PowerPacks revenue. you could make two different arguments. You could say, one, that he's totally separating out PowerPacks and he was only talking about GameStop proper's collectibles, in which case you would say that either he is being very generous about just about a third, which I think the odds that it's 26% when he's saying it would have been just about a third, I think that is negligible. I don't think that's possible, because he also said that it went from just about 10% of company sales to now just about a third. And look, they were at 10.6% in Q4 of 2020. So if he said just about 10% and the number was 10.6, what are the odds that he would say just about a third and it's 26% in the same sentence, right? He would say over a fourth. Thank you, It's Night. Or he would say just about a fourth and surprise to the upside. The other thing you could say is, if you think he's referring only to GameStop proper collectibles, you would say that, well, hardware is going to just fall off a cliff. And as a result, what's the total number here? If hardware falls off an absolute cliff, has the worst Q4 ever, this 3.8 becomes 3.5. You're still only at 28%. And the odds that hardware does 400 million in Q4, the odds that it does only 400 million is zero. Like it's not going to be that low in Q4. So again, you could say, well, what if it does? Or what if it's only 500? And what if collectibles just doubles quarter over quarter? Ridiculous numbers, right? Collectibles, GameStop proper collectibles probably will not double quarter over quarter, when for the past several quarters, it's been growing at like 20 million a quarter. Okay. And there's no catalyst for it to double, right? Like there's no reason it would. But even if it did, what does that give us? This is back to 3.8, but now collectibles is 1.2 of the 3.8. Okay, so then you're at 31.5%. So if hardware falls off a cliff and collectibles doubles quarter over quarter, then you're in the range of Cohen's interview. What I think is more likely is that Cohen, in his mind, was thinking about PowerPacks in addition to GameStop proper collectibles, even though PowerPacks are not actually reported within GameStop's operations. So the reason why this question is so important is because it gives us a proxy for PowerPacks revenue. It's one of many proxies. It's not the only proxy. And again, we'll get closer to an actual estimate in coming weeks and months. But this, like 700 I consider that a conservative number for Q4 Switch sales. I consider 350 to be an aggressive number for for collectible sales. But even if legacy collectibles is high, legacy hardware is low, even if that happens, there's still how much more revenue in digital PowerPacks before the total percentage gets somewhere closer to that 33%? It's about 300 million If PowerPacks did 300 million, that puts you at 31.7. Is it possible that they did 300, that they will do 300 million? I don't know. It might still be too high because in Q3, the first quarter of digital PowerPacks, it was probably 30 to 50, which would mean they would need what, 170 or 150 in Q4. That type of growth is possible, but again, maybe it's 200 million total, 50 in Q3, 150 in Q4. That would be more plausible and would put, if Ryan's thinking about that in that interview, then that would put collectibles plus PowerPacks at 30%. So again, I think just another benchmark, another proxy for what type of scale is digital PowerPacks doing is Ryan Cohen's interview, because it's very likely to me that in his mind, he was also thinking about PowerPacks, even though PowerPacks is not technically reported within GameStop Legacy's collectible sales. I think in his mind, he probably was considering them together in that interview. It's part of the risk of hearing an interview and then making a bunch of assumptions and reworking your whole model, right? I just flipped everything, flipped the whole table, redid everything, full sent it on that interview. And it's like, well, dang, sometimes loose lips can sink ships, like his interview was not necessarily a formal SEC filing, like he could have said things conflating one joint venture with his other business. And the numbers would suggest that that must be what he was doing, or he was lying, right? Which I don't think, again, is a very viable, I don't think that's a very viable take. Kevin, their inventory is trending accordingly with store closures. It's like they're holding the same amount of inventory. And the asset held for sale is France. It's all their France business. All the French leases, French property, French inventory, French goodwill. That's their asset held for sale. Easy Rider said, cheers for that. Much appreciate the detailed response. Thanks, Easy Riders. What else? Yes, we did close a bunch of stores, but sales per store going up like wildness. Sales per store up 60% year over year. Collectible sales per store up 150% year over year. This is another awesome, two things I want to say about this number. Someone in a comment in a video recently was like, yeah, but is that really bullish? Because doesn't that mean they're just like maintaining customers, right? The sales per store isn't actually sales growth. It's just customer retention with a smaller sales footprint. Two things I would say to that comment. One is, even if it's just customer retention, it's bullish that they can retain all their customers while them having to drive farther, etc. But it is more than just customer retention. Because look, last year, they closed 1,000 stores and their sales per store were down. 1,000 fewer stores, right? 25% of their stores closed in 1 year and their sales per store were down. So for them to be closing more stores, yet sales per store is finally ticking up super meaningfully, that is very bullish. It's very bullish. They have been closing stores, like I said, every freaking quarter, every year for years. And their sales per store, other than 2021, right? I mean, flat in 22 and then down in 23, down in 24, right? So sales per store up, and it's more than just customer retention. The second thing I wanted to say about this, which OG just said this, he said, isn't sales per store a bit misleading? Just thinking as more and more revenue is being made online. That's exactly the point, OG. That's the second thing I want to say. It's not like more and more people are going into their stores. It's that GameStop is shifting more and more of their business online. What's more important to GameStop? To be the best brick and mortar retailer out there, or to be valued like an online retailer? It's more important to be valued like an online retailer. That's the buller case. That's the buller case. you know, more people coming in store is the mid case. It's the mid bull. But if you want to be the perma bull, then you would say they're not doing more sales in their stores, they're doing more sales online. And I think the fact that so much of this is highlighted by the collectibles is a great indication that that is the case, because what can you buy online at GameStop that you can't even buy in stores? Graded cards. All of their graded card sales happen online. When did they start selling graded cards? Q4 of last year. So what were their collectibles sales per store before that? $50K a quarter. $50K a quarter was collectible sales per store before the PSA partnership. Where are they at now? $120K in a quarter. Is all of that online? No, because there's also like TCG has been going viral, right? More people are buying in store than before, right? More people are buying in store than before. But a lot of that $70K per quarter is just being attributed per store when it actually has nothing to do with the stores. It has to do with this. So if you wanted to divide up GameStop sales, like the percentage of sales that happens in store and the percentage of sales that happens online, we don't know that number factually. So it's a little bit hard to do, but it's definitely growing. The online portion is growing to be a bigger and bigger portion. And as they continue to lower their store count as well, that's going to just exacerbate, magnify that trend that much more. So again, a larger and larger portion of GameStop, the retailer, should be valued as online, and a lower and lower portion of GameStop, the retailer, should be valued as specialty brick and mortar. Goodbye, Best Buy, right? Hello, Chewy. Man, if only the person who founded Chewy could help GameStop learn how to shift itself to an online retailer. I mean, that would be great. That would be great. WJP says, so potentially 1/3 of GameStop sales minus reported legacy collectibles equals GameStop's PowerPacks sales. Yeah, I mean, that's one proxy, one way to back of the napkin how much is PowerPacks doing is at the end of the year, right after their 10K comes out, last week of March, not first week of April. We'll see what's collectibles doing, what's the stock doing, and back out collectibles from full year sales and say, okay, we want to get at least to around 1/3 of that, right? Or at least 31% of that, right? What fill in does PowerPacks account for? Skybike says, I wonder if him having insider knowledge that PowerPack subsidiary makes him ineligible to purchase common stock. I thought only once all info is made public can insiders buy. I mean, that's totally possible. I need to I don't know that about it. I don't, I don't I need to learn more about it. I don't know the literal insider trading rules, but we haven't seen a buy-in in a while, and that could be why. That could be. It's like, hey, you know too much. You can't buy right now. Then you said soon one store with 5 billion in sales. Yeah, that's where we're going. Just kidding. I think we might get down to 800 stores one day. I'd be surprised if it's lower than I'd be like really surprised if it's lower than that. I think it's more likely we end up around 1200 or maybe on the high side 1500. And yeah, same argument could be made for Nat Turner. Like, why hasn't Nat Turner bought any GameStop? It could be that this entity has eliminated their ability to buy into GameStop, the parent company, for now. Which, if you want, what am I trying to say? One argument that could be made for will GameStop, will materiality be reached sooner? For example, anyways, you could argue that maybe GameStop is incentivized to go ahead and allow materiality to happen sooner because maybe Nat Turner and Ryan Cohen and the owners and executives of GameStop are like, we want to buy more of this, right? Let's go ahead and get this reported so that we can finally buy it, right? Certainly possible. That said, Nat Turner and Ryan Cohen have a lot of underlying exposure to PowerPacks because of the shares that they own of PSA and of GameStop. PSA is not publicly traded, but the insider, you can privately trade them, right? There are employees with company shares. They just don't have a public market for them. Alfred said, I found out that my local store is a $2 million store, quote unquote. They do a lot of online fulfillment. I don't know if their online sales are attributable to the store or if it's a part of a different line item. There's a lot there, Alfred. So as far as this calculation on my end, I just divide all their sales by their total stores. But most likely 98% of GameStop's online fulfillment that's done by their stores is generated from their website. It's a fraction of online sales probably that are generated by the store. So this is really interesting. Alfred says, I guess, Alfred, did you just talk to an employee? Did they say that? For them to say that their store is doing 2 million and then to follow that up with they do a lot of online fulfillment is again, oh, Alfred says, yeah, he's close with the general manager of the store. That's awesome. Thanks, Alfred, for the DD, man. For GameStop's, for that comment to be followed up with a lot of it's online is a great tangential evidence towards what I'm saying is it's not that more and more people are going to the stores, it's that more and more people are buying online. It also makes sense with why didn't these store closures increase their sales per store, right? They closed 1,200 stores over the span of time and sales per store is down. So what's driving the online? Well, GameStop, of course, their website's better, but what's really driving it is collectibles, which is great. That's the highest or one of the highest portions of their revenue. Their highest margin item outside of used software. Even used software is probably a lot of that's going online now. So anyways, GameStop succeeding as an online retailer is it's like the crux of the bull case for GameStop legacy. GameStop legacy is really interested in improving the stockholder value, the valuation that GameStop legacy receives. By keeping PowerPacks separate, they're able to flex their GameStop legacy muscles. $2 million per store, though. Like if they're down to 2,100 stores, like I wonder, actually, let's go to the 10K and show me United States. United States did 617 million in sales. And their stores, how many of the stores are freaking Europe? Show me their last 10K. Oh, geez. 10K. Did I miss it? I did miss it. Oh, there it is. They had, so 1,000 stores are Europe. Oh, sorry, over here. 311 plus 374. They were down to, so if they're down to 2,000, that they've wiped off they haven't actually sold France yet, but they've removed them from their, like they account for those stores differently now. Oh, where am I? So if you take that 2,325 they started with, or sorry, the 3,203 at the beginning of the year, for sure 311 came from Europe. They've already sold Canada, which is 193, which leaves them at 2,700 stores left. But they are down to 2,093, which means they've closed 600 stores between US and Australia. And US, let's see, 2,325 plus 374, 2,325 divided by, so the US was 87% of their US plus Australia business. And if they closed 600 stores and 87% of it was in the US, that means they closed 522 stores. 2,325 minus 522 means there's about 1,800 US stores left. If that manager's store is doing 2 million, if every store was doing 2 million, then they would have generated 3.6 million, but that's annualized terms. So that $2 million number from that GM is almost definitely annualized. 3.6 billion though for just a US. I mean, it's definitely the fact that your friend was proud of that, which means he's definitely doing more than the average store. But he's like the average store is probably more than 1.5 if that one's 2. I don't know. But basically just US, I mean, that's crazy. Like the total, I mean, like last year, for example, the average store, the pure average. Oh, Skyback says insiders should still be able to buy despite the joint venture. Like sales per store last year did 1.2 million per store. That was your total average. The US average, no doubt, is higher than that. Like what the actual, I wonder what it actually is. 2575 in sales for fiscal 2024. Store count. Oh, maybe not. 2525 divided by 2325. Yeah, US was 1.1. The US stores actually did less in sales than their company average. They just did it more profitably. Holy smokes. This year, stores so far, I mean, on a trailing 12 month, stores are doing 1.51 million in sales. So yeah, the average store literally right now is doing 1.5 million. This guy's store is doing 2 million. Is it somewhat of an indicator? Alfred said, yeah, he's doing more than average. He was telling me he has to buy extra office supplies like receipt paper because GameStop only supplies a flat amount per store. GameStop, supply your stores, you crazy cost-cutting shark management. Don't make your general manager buy his own receipt paper. Golly, we're getting there, guys. Anyways, 1.5 mil is average. This store is doing 2. As more store closures come, is a 2 million per store average. Does that become like a leading indicator, right? Are more of the stores that are doing 1.2 or 1.1 getting cut? And is that consolidation raising the floor for the stores that remain? Does that bring you up to a maybe a 2 million per store kind of floor, and then the stars from there do even more? I don't know. Super interesting. But 1.5 is not the floor. That's for sure. His store is doing 2. His store is doing 2. And if everyone's stores did 2, then we'd be at 4 billion in sales. 4.2 billion in sales. If everyone did 2. Which is exciting. Anyways. It's almost lunchtime. Well, let me close with this. Not that anyone is probably like still listening, but PowerPacks for now, how is PowerPacks valued from the outside looking in? Like from the ground up, the way you would value PowerPacks now is to try to get as much corroborating evidence as you can about their sales and give some type of option premium. Like just, it's like you wouldn't necessarily value it intrinsically dollar for dollar with a high level of confidence, but you'd say, okay, if GameStop's PE, oh, what's up, Noodles? Noodles is listening. If GameStop's PE is blank, and that's on kind of the lower end of their specialty retail comp, it's like, well, hey, maybe let's just like give them a little, like you just give them a little bit of extra value, right? Nothing crazy, but hey, there's upside with this thing that's going on, right? There's upside. It's just kind of baked in, a little bit of option value, a little bit of upside. Jeff is listening. What's up, Jeff? Once materiality is reached, there's some type of price to sales multiple that PowerPacks is going to get. And you're going to base that price to sales on like an annualized number. So if we get sales figures after Q4, it's like, well, hey, let's assume Q1 and Q2 do at least something, or I should say like Q1 and Q2 of next year. And obviously Q3 is not the floor because it's just beta and it's just Pokemon and football, right? So conservatively, let's annualize those sales numbers. And then let's give them a price to sales figure. Maybe that's 2x, maybe that's 8x, maybe it's 5x. Depends on the evaluator, because obviously it's a spec investment. It's a speculative investment. It's a new market. There's not a lot of historical data to give us a high floor, right? There is a low floor. There's a high risk with what if collectible sales come down over time, right? What if the hype stops, right? At least that's the way it would be viewed. So you give it some, but you'd still give it a premium price of sales because it's so stinking scalable and so stinking sticky. And its peer group of kind of gambling companies has, like, they command high price of sales because of that. Once maturity is reached in the business, which basically means the company is no longer just reinvesting net income. Like, you would have to value them on price to sales at first because they are intentionally suppressing their net income by reinvesting it all into scale. And so obviously you wouldn't value them on a PE when their E is like not reflective of their eventual E. And you would know because you're going to have their gross profit. So you'll see their margins, even if their operating income is zero. If it's because of SG&A, if it's because of them reinvesting gross profit, well, you still see the gross profit, right? So Jeff said, I've subscribed and hit the like. Thanks, bro. Thank you to the subscribers. Jeff, you were one of those 2 people. Thank you, Jeff. Or maybe you already were subscribed a long time ago. I don't know. What am I doing? Oh, PowerPacks. Valuation. You have to do it at price of sales at first because they're intentionally reinvesting all their net income. Eventually, you would value them like when maturity is reached. They're not just burning through all of their gross profit back into scale and scale and scale, but they're actually like pretty happy with their scale and they're still growing and they're raking money. Well, then they're going to be valued on some type of PE. Again, according to their growth rates relative to their industry peers. So eventually they're going to have a 35 to as high as an 85 PE for a fair value, depending on how people value the stock. But depending on how their growth rate compares to a Robinhood, to a DraftKings, etc., to a Fanatics, although Fanatics is not publicly traded. Then with that PE, it's going to be discounted, say 20%. Some type of discount, a reduction in value based on the fact that you can't own it directly as a pure play. You have to own it together with GameStop legacy. So whatever value you would place on the pure play of PowerPacks, you would give some type of discount to how you would value it lumped together with GameStop. So at first, right, option premium. Then once materiality is reached, now you're talking about price to sales. You can start baking in some price to sales when it's still in the option premium land, to the extent that you can, with high evidence, estimate their sales. Once they're reporting sales numbers, right, you're giving them some type of price to sales, but you can start to bake in some type of PE, some type of earnings power based on the margins of PowerPacks, right? You'll see the margins, which will then be a very key indicator for what their eventual income will be. But you're not going to totally value them on a PE until they're actually at that stage. Then they're at that stage, they're at maturity, you're valuing them on a PE, but you're discounting it because they're lumped together with GameStop, and the type of investor that wants GameStop legacy might not be the same type of investor that wants to own PowerPacks, and vice versa. So they're both discounted a little bit, but you're still doing a sum of the parts valuation. The last leg is spinoff. If spinoff happens, that 20% discount is automatically removed, right? Now it's the pure play GameStop plus the pure play PowerPacks would command a higher total market cap than GameStop plus PowerPacks holding entity. GameStop plus PowerPacks holding entity would command a higher premium, a higher market cap than just GameStop. Even though PowerPacks numbers aren't reported within GameStop's numbers, it will still increase GameStop's valuation due to their holding in PowerPacks. But if and when they're spun off, it is full market cap realization for both. So the full market value is achieved based on their relative PEs. And there's also further technical upside in both because now there is increased total short exposure to both, right? There's more battlegrounds for shorts to have to continue to fight. There's higher risk that one of GameStop or GameStop Plus or PowerPacks tickers squeezes, and one squeeze could trigger squeezes into the others, right? It could become a melt up ascending spiral of technical value. But fundamentally, you would simply value them up to the full valuation that you would have valued them independently, which eventually will be, again, two different PEs based on two different peer groups, etc. Hopefully that makes sense. I'm excited to see it. And in my videos to come this week, I'm excited to kind of put PowerPacks on the side for now because the next thing to talk about with PowerPacks is really what numbers have they done so far and what numbers might they do in Q4 and Q1 and how much longer until we really see materiality, and then how do you value that? All of those things are very forward looking, and there's still a lot of Q3 earnings implications that I want to get through, particularly within the hardware line. I want to take a dive into how could I have fundamentally from a bottoms up approach using Nintendo's earnings, like how would that have impacted my modeling? And ultimately, what are the implications to the numbers that GameStop reported? Like, how do you value their hardware business now, their software business now, their collectibles business now? Now that we're gonna strip out PowerPacks from the collectibles business, so then you have the total GameStop retail business that is just hardware, software, collectibles, and then you have a separate PowerPacks business, and then you still have the separate asset management business. Excited to get into those valuations. As well as updating some of those things we talked about earlier, like what's the new cash floor? What are my expectations for coming quarters as it relates to what I call the fundamental floor, which the fundamental floor is higher than the cash floor because fundamentally there is, like, GameStop has enterprise value and that enterprise value is growing. All the fun stuff, right? Really excited. And honestly, just a wonderful time for the stock. Obviously, I know some people disappointed in the numbers. Hopefully some consolation prize is, hey, this doesn't include PowerPacks. And the whole point of this live stream is not only is that like a consolation prize, that's actually very bullish that it does not include PowerPacks. If management didn't think PowerPacks was a incredible needle mover, they would have absolutely no reason to move them into their own non-operating investment, right? If they didn't think that on a standalone basis, PowerPacks could command a substantial market value, they would not make it a standalone business. There's a reason GameStop didn't open a bunch of kiosks all across the country to submit cards to be graded and make that a joint venture. Like, there's not enough value in GameStop, the authorized PSA grader. Like, that doesn't need to be a separate company, right? Just put that in with our operations. Just incorporate that with our stores. PowerPacks, management thinks highly enough of this business to make it its own standalone business. Super bullish. What's up, Benji? Oh, Edishinashkish says this guy's a grifter. Thanks, Edishinashkish. What's grifty about me? Aiden Shogi? Maybe that's how you say your name. I was about to log off, but now I kind of want to entertain the convo. Aiden, are you still there? Aiden. I mean, just make the case. I want to hear. Is that all you have? Did you leave? Did you drop that comment and leave, Aiden? Come on. No self-defense at all. Where is he? Oh, nope. Chris says bots don't listen very well these days. Yeah, maybe not. It's a shame. It's a shame. Look, if I'm a grifter, then I'm the one that's getting screwed because I haven't kept or spent a single dollar from YouTube. All I've done is bought GameStop with it. So like I don't know if the joke is on like the joke is on me, right? If I don't actually believe in what I'm saying. Anyways. Okay, fine. We can check out costs real quick. What's going on? Well, nothing. Why am I looking at costs? Are you talking about a different cost? He's not. He's not talking about costs. Normally when cost rips, it is kind of a signal for GameStop to rip. Aiden, I've shown my position before, but I will need to like take a screenshot separately and then put that in a video because if I log in right now, you're going to see my account number, which is not my goal. But also I manage money professionally and I can't show you my clients' positions, you know, like I legally cannot do that. I can't be like, but what you can do is you can look up my firm. I mean, you still don't know how I'm allocating my clients' assets, but like if you go to my website, like you can look at my Form ADV, which this is like an SEC filing, right? I have to update this every year. So this is out my business, and somewhere in here is like I have to report my AUM. Oh, there you go. As of January, I was managing $5.4 million in assets, and I have to say how many households and organizations. And you can look this up on the SEC on FINRA. Like you can look me up. But obviously, I cannot show you my clients' positions. That would be like such a fireable offense for my business. And I'm sorry, YouTube does not pay that well. Like, Vladdy says, are you saying all your clients' positions aren't all GME? Of course, Vladdy. My clients are not me. I'm a fiduciary. I'm not a hedge fund. Hedge funds can do whatever the heck they want with anyone's money, and they're not legally obligated to care. Like you sign your life away when you send your money to a hedge fund or a private equity fund. When you hire a financial advisor that's a fiduciary, they're legally obligated to prioritize your best interest financially. And I feel that it is in my client's best interest for them to have substantial exposure to GameStop. And that's something I talk to my clients about all the time. Like when they're like, can we please have less GameStop? And I'm like, look, we can, okay? Ultimately, I work for you, okay? But if you're asking me, I think you should have every single share that you can potentially stomach without losing sleep at night. But if you tell me to lower your position concentration, then I will do it, you know. And some clients do. They don't want as high of an exposure or different life expectancies and different liquidity needs, like whatever. Some clients are like, I'm going to invest this now, but I'm going to pull it out in 6 months to buy a house. And because of that, I want it to be super, super conservative, et cetera. Every client's different. So, Aiden, if you have never seen my GameStop position, it's because you haven't been here since the beginning. But I will put it in a video at some point. But I can't log into computer share while I'm on the stream. But then you'd also have to like GameStop is more than 100% of my net worth. So, but for you to verify that, you'd also have to look at all of my line of credit contracts with investors, people that I've borrowed from. You'd have to look at every single personal loan I've taken. Like I have levered to the brim, and all I own is GameStop and GameStop warrants. So again, if that's grifting, you can call me an idiot. Why don't you call me an idiot, and then you'll have a lot more you'll have a lot more evidence you can pull from on how big of an idiot I am. But grifting is like, I don't know, man. Some people really don't like this about me. In 20, I don't remember, 2023? I guess it was 2023 now. I moved 10% of my portfolio into BBBYQ, even though the ownership was like obviously the bull play was not on SuGov and whoever, private equity firms that were taking it over, was not the bull case. But the bull case was, man, Ryan Cohen had bought in. He said it's just kind of like, is he still involved or not? And once it got down to a few cents per share, it was like, I think he still is. Like, I think he's going to come back for it. But I mean, so far I'm dead wrong. I've lost all the value there. But I also have owned Tesla. Like, I used to own a lot of stocks. I've only concentrated. Like, I've never been this concentrated about anything. Even Tesla during the run, like I bought in 2019. I bought more in 2019. Bought more every month for 15 months during that whole run up. But at the peak, it was still probably only 60, 70% of my portfolio. And that was after buying every single month and after it had appreciated by 13x or something, So, anyways, I'm not like, my commitment to YouTube is not for every single one of my dollars ever, 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 forever to only be GameStop. My commitment to YouTube is every single dollar that I earn from YouTube to be Dearest Book GameStop shares, So that's the grift, right? All you care about the grift is like, what am I doing? Like, why am I here? Right? Why am I making videos? What am I doing with the money I'm earning from videos? And it's like, I'm here by accident because I've been making videos for years. And every now and then I would make a GameStop update one, and one of them happened to go viral. And I was like, okay, well, maybe I'll keep making some. It wasn't like I'm trying to be a YouTuber, but I was like, hey, if I'm going to keep making some, here's what I'll do. I'm going to align my interests with your interests as a shareholder and buy GME shares with every dollar that I make. So it hasn't benefited my lifestyle 1%. It's actually negatively impacted my lifestyle because now I spend hours making videos. There's other things I could be doing. Anyways, what's he saying? He just wants to see my GME position. Look, I've said it like 6 times already. I'm not going to do it on this stream. I'm not going to log in to my account on this stream. Other people are like, don't show them anything. Kyle says, how do you feel about running the wheel on GME? I don't know what that means, Kyle. What do you mean? Griff says Ryan bought in because he was interested, but then when he pulled out, he he was done with it and the FUD followed. Yeah, I mean, definitely, I don't have many legs to stand on with the BBBYQ other than like it's still in bankruptcy court and we'll see, like I'm not willing to wear the L. Like I'm not willing to tattoo the L on my forehead yet. But once the bankruptcy court's over, then I will put it on my forehead, you know. But so far I'm like, I don't know, I'd still give myself a 5% chance to look like a genius one day. The truth is though, I'm not a genius. You all know that. Aiden says, you keep saying DRS book GameStop shares, but those shares are in your name. So just say your donations are going to my pocket, not GME DRS book shares. Come on, man. Okay, so this is different. This is different. Now you're upset that I'm using my channel earnings to buy DRS book GME shares. Sorry, Aiden. I literally show every time I get paid, I show the screenshot of PayPal paying me, right? Or like Google paying me. Of course, it's in my name, dude. Of course. Could you tell us something about the $32 strike price of the warrants? Do you see this as Ryan telling us it's at least going to 32 within the year? Yeah, I do. I do think that. Oh, then Aiden says, all caps, love you, Jeremy. I don't know, bro. I'm not feeling love vibes. Other people that love me are nicer to me. The internet drama. You do you, Jeremy. Thanks, Peter. People are very activated by your skills and ability to do the math. I'd appreciate it. Oh, Vladdy says, that's where you're messing up, Jeremy. It needs to be in Aiden's name. Yeah. I need a DRS book, Jeremy. That's what I'm going to start saying, Aiden. I'm going to start next video. I'm going to say, hey, thanks for the subscribers. Thanks to those who have joined as fans and friends. 100% of the earnings of this channel go to DRS Book GME shares in Aiden's name. 100% of the earnings of this channel, okay, that I own, of course, they're earned by me. And what I do with the earnings is I buy I buy GME shares on Fidelity and then I DRS them. Okay. And so far I've been paid twice. And we're at a $50 gain. And maybe that's why Aiden is sad. Because he doesn't believe in GameStop. I don't know. Why are you sad, Aiden? Saying 100% of the earnings of the channel go to DRS Book GME shares is not the same thing as saying 100% of the earnings of the channel get donated to my local children's hospital. Like, I don't know how to help you. Like, I'm telling you exactly what I'm doing. And the goal is not, wow, Jeremy, what an amazing philanthropic guy. Like, that's not the point. You don't have to think I'm philanthropic. Like Easy Riders, he puts it this way. It says, then people can support GME through YouTube. Yeah, I mean, that's the whole point. Is like if you watch the channel, even if you never join the channel, even if you never buy merch or whatever, like literally just you watching is directly supporting GameStop, and that's, if you are also a holder of GameStop, then like, that's kind of cool. It's the aligned interest. It's if he wins, the company wins. And if I learn something, like you learning something is you winning, but the company winning is also you winning if you also hold shares in the company, right? So it's like we're all in this together. We're all winning together. Easy Rider says, Aiden, the guy's taking time to make content for everyone. Who cares if the DRS goes to his net worth? He deserves it. It takes a lot of time to make a YouTube channel. It's true. And so far, these earnings, way less than minimum wage, okay? So I do not feel like one day when this is like, who knows how much earnings, but what's really going to make people mad is this gains number is going to be ridiculous, right? How's the internet going to feel when these 34 shares are worth who knows how much. And then they're going to be like, no fair. And I'm going to be like, look, I took minimum wage earnings, less than minimum wage earnings, and I bought a company that I've been talking about from the beginning. It's not like anyone would be surprised. Like, I don't know. Like if GameStop's worth a lot more one day, like what else was I supposed to do? I've been talking about this company every single video, Like what else am I supposed to do to tell anyone else out there making minimum wage that hey, you might want to try to put it into GME if you can, not financial advice, do whatever you want to do. Jeff says maybe he has all his money in AMC. Yeah, that would be that'd be unfortunate. Anyways, I've also been clear, like, hey, if like at the beginning of my channel, not everyone, the haters were like, you're gonna fail as a YouTuber and you're whatever, you suck and something like that. And I was like, yeah, like, first of all, I could fail. Second of all, it's not my goal to succeed as a YouTuber. I'm just here to provide value. And if the internet finds value in it, then great. If the internet doesn't provide value in it, then I will stop making them. So like, it's not it's no hard feelings taken. Aiden says, if you're such a successful investor, why are you taking donations at all? Okay, Aiden, I am not taking donations. Like, I'm not taking donations. So I don't know what that first comment even means. You can't make content for the love of making content, LOL. Come on, Jeremiah. Okay, my name's not Jeremiah, but I am a bullfrog, but I'm not a cat. Just kidding. No, Aiden, bro. I have been making content for years. I have 433 videos. So how many did you want me to make before this counts as making videos for the love of the content? YouTube is paying me. Is there anything that I still got 100 left? I still got 100 left, Aiden. Look how many views all these have. 8, 6, 5, 2. Like, what are you even talking about? It's crazy. It's crazy. Oh, Kyle says, wheel is in selling cash secured puts. Oh, and then cover calls once assigned. Rinse and repeat. Use a premium for additional shares. Like the option strategies is ultimately not what my channel is all about, because I've sucked at options so bad. And so like I don't want people to fall into the pitfalls I made of getting greedy on the upside, trying to make every single dollar I possibly can. And I just focus on the fundamental value. But I think it's a totally legitimate way to earn income on GameStop's volatility. And ultimately, my preferred way, if I am inclined ever to make money on GameStop's volatility, the way that I would do that is by selling shares and then buying back in. Like if GameStop was at 50 today, I would sell some portion of shares, not all my shares. I would sell some shares at 50 today, expecting to be able to buy back in. But if I wasn't able to buy back in, I'd be okay with the amount of shares that I lost. Similar to if I sold a covered call, right? Like, okay, if I get assigned at blank strike, I would be okay to lose those shares, right? But I don't like this. To sell covered calls, you have to put the strike so close. Like I wouldn't be pumped to lose shares at 26 right now. Like that wouldn't make me feel good. And if I sell a covered call at 35, then it's like, man, how much money am I really going to make on that covered call? You know, like I would rather have the flexibility to be able to trade the shares rather than having to trade the options. But that's just for me. But I don't really trade. Like I really just buy. Like usually every time it runs up, I'm like, I could sell, but man, this could really be the run, And I start looking at my fundamental value, right? Like what do I think the stock is worth? And should I really be selling aggressively when it's still trading lower than my fundamental value for the company? You know what I mean? If one day it's trading above the value, like above fundamental value, then I would sell a bigger chunk. I still wouldn't sell them all because the technical value is even higher than the fundamental value, aka the squeeze play, right? The upside is still super high, even if the fundamental value is taking a slower growth curve to catch up to speed. You know what I mean? Anyways, I have to pee so bad. I talked for another hour than I planned. I think that's all Aiden wanted to say. He says that I know that I'm a grifter, and y'all can believe him if you want. He also says I'm the reincarnation of PP seeds. So I don't know anything about that handle, but y'all can look up PP seeds if you want, and then look at my face and see if I might be his reincarnated soul. But I'm probably not, because I've never met him or talked to him or watched a single thing that he said or gone to his channel. For all I know, PP Seeds is a adult filmmaker. Just kidding. I think I do remember the name. Like I think he talked about, was it Bed Bath and Beyond, and he did stuff with Pulte Soul. Aaron says, "Don't mind the hate, Jeremy. I wonder who's paying these guys." No, sometimes I just like to give the haters a little bit of runway, just because if it gets too rude, then yeah, of course I'll block. Like I'm not trying to be ultra aggressive or anything, but space for the bears. Like I like comments that genuinely try to like argue against the fundamentals. That helps us all learn more. I also genuinely like, in this case, in this live stream, like comments that genuinely try to question my intentions or motives. Which again, my goal is not like, I must make sure that no one ever questions my motives. Like the goal is let the content speak for itself. If you value the content, if you learn, then great. If you don't, then don't. Like it's not a big deal. And if you don't, then I'll stop making it. Like it's very simple. Very, very simple. It's not like I'm making content for the money, but it's like if the views go down and down and down, then the earnings will also go down and down and down. And if the earnings go down and down and down, then that's just the internet's way of telling me that my content is not valuable. You know what I mean? It's not like I don't, this is not my living. You know what I mean? So anyways, Schoolboy says, you don't really have to give the babbling so much room. You're doing great work. And of course, you can take the donations without a slight of guilt and need of justification. Thank you for all. Okay, I don't take donations though. It's not a donation. Like the hope is that if you join the channel as a fan or a friend, that you get like you are, I guess you could say it's like a super chat on a live, I guess you could say is like a tip. That's like a donation. So I could see that. Joining the channel, you could view it that way, but my hope is that the perks make it fun, a way to say thank you, kind of like a mutual win for you to invest in something to improve over time. Even the super chat, right? Like you could think of it like, oh, I'm giving a tip. Like I'm just giving a donation, but you could also view it as an investment into the channel that helps the channel reach more people. because I'm sure YouTube tracks all that stuff, right? How much is the channel making? How much views does it get? All that. How engaged are the members? How many members does it have? All of that stuff. So you engaging yourself financially in the channel probably helps the channel grow, and helping the channel grow probably helps more eyes get on the GameStop story. More eyes on the GameStop story probably converts into more GameStop investors and shoppers, customers probably converts better to GameStop's financials, long-term value. So again, it's all about aligned interests at the end of the day. But if in your mind it's just you being a good person and feeling inclined to give to me, then I guess that's just semantics, and I will accept it. I will accept it and appreciate it. But you don't have no one has to view it like a quote unquote donation if you don't want to. And most people don't, anyways. Like I said, I'm making less than minimum wage. OG says you have a super positive and friendly attitude. I appreciate your content. Don't let the trolls troll you. And I'd rather be skiing says we love all the info and analysis. Lord knows the industry and media won't do it. Ain't that the truth? All right, I got to roll, guys. It's lunchtime. It's time for me to use the restroom. Hopefully you learned something in this video. Thanks for those of you that hung out together. And yeah, that's all I got for you today. I will see you in the next one.